Hello and welcome to this webinar. My name is Deirdre Fulton and I'm a partner at Midas Aviation and I'll be moderating the discussion today. This is OAG's second series of webinars focused on COVID-19 and it's good to see some of you who joined us last time have come back for more, and of course welcome to those of you who are joining us for the first time. I'm joined today by John Grant, OAG's senior analyst, who's been tracking the impacts since the start of the coronavirus outbreak. We also have Matt Colling, OAG's EVP of Product Management, on the panel, and Matt is responsible for some of the interesting data that we're going to see later on. I'm pleased to say we're also joined this afternoon by two leading industry experts. First up, we have Jeremy Robinson, who's a London-based partner in Watson Farley Williams, an international law firm. Jeremy specialises in aviation-related competition law, so I'm sure we'll have some interesting insights for us as we go through the webinar. And lastly, but by no means least, we're pleased to welcome Eddie Pienzek from ISCA to the panel. Eddie's head of advisory at ISCA and led the way in the development of today's aircraft valuation and appraisal industry. So very topical subject that we'll hopefully touch on today as well. Now, as we're having to say at the beginning of all of our webinars at the moment, most, if not all of us, are joining from home today. So there may well be some background noise, barking dogs, noisy children, and other distractions. We do hope not, though, and we will do our best to minimise them. If you're experiencing any sound quality issues, it is likely that the problem may be due to your broadband capacity. So please don't worry about that. If you are experiencing sound problems, we will send a recording to everyone who is registered after the webinar. Let's move on to our first slide and welcome, of course, to the panel. So today, sorry, I skipped ahead there, one slide too quickly, gave you a little sneak peek of what's coming. Today we're going to use OAG data and analysis and have our experts take a deeper look into the COVID-19 crisis and the ongoing impact on the air travel market. We're going to refresh some of the data that we looked at on our webinar, which we ran 2 weeks ago, and discuss what these changes might mean for the industry. We're going to take a look at some differences that we're seeing in international and domestic markets and talk about some of the implications for airlines and what we're seeing emerging or starting to emerge in terms of industry support. Then we hope to be able to answer some of your questions, so please do send your questions to us. I think we've got some coming in already, which is great to see, and the panel are looking forward to talking through some of those later on. Before we get into some of those things, we thought it would be good to just talk a bit about how dynamic schedule changes really are just now. Matt, would you like to talk to us about what's put together here?
Sure, thanks Deirdre, and good afternoon everyone. So there's obviously been a lot of press coverage around schedules changes, and we as OAG are tracking them and working with the airlines to update their schedules as rapidly as we can, and to get data flowing in from the airlines on a real-time, daily or weekly basis. And lots of those relationships with those airlines have led to more frequent updates flowing into ourselves. But despite that, we were hearing and getting requests from our clients regarding the speed with which the schedule data was responding compared to perhaps some of the news stories people were reading as announcements were being made in the press. And there were the number of scheduled flights was not declining perhaps as fast as people were expecting. And because my responsibility at OAG is for flight status data, I thought it'd be interesting to look at cancellations and see if there was a story to be seen there. And this data shows you that the black line here is the scheduled flights. I think this is a particular country we've used as an example. And you can see that the yellow line, which is the cancelled flights, and this is cancelled, sort of a cancelled operation as opposed to being withdrawn from the schedule. There is a significant increase in cancellations in the days leading up to the point at which the schedule starts to decline. And so what we're seeing is that the airlines are managing their frequencies and capacities by using cancellations initially once they can get control of their their plan and they can prepare their plan to manage their schedule down. Then the cancellations decline in number, but the schedule comes down as well. We've plotted it here against sort of COVID-19 cases, so you can see the correlation between those two.
And that's the blue bars, isn't it? The
Correct.
cases.
Yeah.
Yeah.
So you can see the yellow and black is the sort of the airline's response as the number of COVID cases increases, and what's not perhaps shown here, but the increase in COVID cases typically is the trigger for governments to announce restrictions on travel. The other point I was just going to make briefly on this slide, which you can't actually see on the slide, but is we see a similar volatility with regards to how the airlines bring capacity back and their use of cancellations to manage that volume of flights. Thinking particularly about China, where we have seen some schedule recovery, particularly on the domestic flights. But again, as that schedule recovers, the percentage of cancellations or the volume of cancellations is increasing in tandem.
And you know, we ran a version of this webinar earlier this morning with more of an Asia Pacific focus because of the timing, partly early in the morning here. And we had a slide in particular that showed that as capacity has come back into China's domestic market, the cancellation rate has sat somewhere between 20 to 30%, which is much higher than the norm, isn't it? I think we could potentially append that slide, couldn't we, to this this pack at the end when we send that out with the recording. I think that would be insightful for participants to see. I mean, this typically we heard this morning from your colleague Mark Clarkson that typically on a normal day OAG would receive 125,000 schedule changes, and that's just grown exponentially, hasn't it, in terms of how the process of how you're keeping track and updating schedules with all of the changes that are going on in the industry.
That's right. I mean, we're seeing, you know, volumes, unprecedented volumes of schedules changes, to use that word, whether it's airlines withdrawing large blocks of their schedule or managing the sort of the near-term horizon and working through their schedule in waves. The volumes of changes are colossal and dwarfing anything that we've seen before. And to give you those sort of similar stats on the cancellations, whereas you may have been seeing those 20% of scheduled flights being cancelled in that Chinese data, typically that would be somewhere between 1% and 2%, or if not lower.
Yeah, so significantly different. What we're showing here, and this is probably directed to you, John, and Matt, is the process, the sort of description of the process that's happening behind the scenes as, you know, news comes into an airline that a country has closed its borders or there's been a significant change, as happened in China just last week when the parameters about international arrivals into China changed. And I guess it also happened this week in Japan, didn't it, or last week? I'm losing track, when they announced that 73 countries wouldn't be able to travel internationally into Japan.
Yeah, so good afternoon, everyone. This we wanted to try and just map out the complexity that an airline has to go through, and indeed OAG has to go through, from the first indication of a schedule change through to that appearing in Schedules Analyzer, because we know there are occasions when it may seem that the data that is in Schedules Analyzer is slightly behind the curve. And we do everything we can to make sure that that isn't the case, but such is the dynamic situation that we're in today. You know, it does it does happen. So if you follow us through it, the first point, of course, is an airline CEO stands up or a CFO stands up and says, we're just about to make 25% of our capacity cuts or whatever it happens to be. And the network planning team and the strategists may have been involved in that, but the actual real detail of the flight numbers, the aircraft types, the crewing resources, and all of those sort of things will still be in process within the network planning team, because it does take some time. But sometimes, and quite regularly, from about 160 different airlines, as soon as the airline closes that flight off for sale in the GDSs and the reservation systems through the APIs that are set up, we know about that, and essentially we can take that flight out of our schedules database. But as soon as the flight is closed, then the airline's reservations team has to begin the process of reaccommodating those passengers. And that can be particularly complex if it's an airline that operates a hub and spoke network. It may have passengers who need to be rebooked onto another airline's flights. There may be some who want refunds. There may be some who want to change the day of travel. And it's a really, really complex task. And if you've got 25% of an airline's network being axed in 1 week and 500,000 seats that you need to reaccommodate, or passengers you need to reaccommodate, that's a lot of work. So they work their way through that process, and that's why, of course, we now see more and more airlines offering the passenger the opportunity to rebook themselves, to take the onus onto the individual rather than the airline. Yeah. Absolutely. Yeah. And during that time, we're living in a world of suspended animation. Once they've cleared all of those passengers, we frequently get schedule notice and we can update the database. But then, of course, as we know, we live in a world of interconnectivity and code shares and alliances. So quite frequently, when an airline goes through this process, it has to notify all of its code share partners. And if you've been at an airport, you look at a departure screen, you can see sometimes 15, 20 different airlines all code sharing on one flight. So those airlines have to realign their schedules and get those in place at the same time. So it becomes a very complex process. It is not as simple as perhaps we just think. It is not a black and white, well, the flight's taken out of the system, it's no longer available. So by the time we see those schedules updates, and we're in a position to redistribute those back out to the global distribution systems and to put them into our schedules analyzer database, it can take up to 10 working days. And I share the pain and the frustration, and we all do, about trying to have that dynamic information. But it is just the world we live in, and we're trying to catch up, and we target airlines where we know they have made an announcement and we haven't seen the schedules change come through, to make sure that we have the most up-to-date and timely information. But as soon as we've gone through that process, and particularly in the last 6 weeks, we've just seen airlines making cuts after cuts after cuts as we work our way through. As they, of course,
respond to, as they respond to what's happening around the world, I guess, in terms of the sometimes hourly changes in positions and developments.
Absolutely.
It's an iterative process, isn't it?
Yeah, and we are doing everything we can to stay up to date and to give you the freshest information possible against that backdrop.
Okay. Talking of the data then, and what we're actually seeing, let's move now to look at what impact the COVID-19 event is having on global aviation. We heard earlier in the week, John, where you wrote the update for OAG's blog, that global capacity is now below 40 million seats, isn't it?
It is. We're down. We started at 106 million in January. We're now down at 39 million. And there's some interesting analysis we'll share with you about the splits between domestic and international. But if you look at this picture, as it develops week on week, this just looks like someone has been given a red colouring pen for Christmas, and has just coloured in the whole of the globe You can see the intensity of capacity cuts that have occurred. And I think the most noticeable thing is in the last 2 weeks, where we've seen a rapid acceleration in capacity cuts throughout Europe and North America. So, you know, I've said before, this is an event that is spreading out from China, both eastwards and westwards. We're now really beginning to see the real impact of that, and many markets are down to less than 10% of the normal amount of flights being operated.
Which is just unfathomable, isn't it? Let's look at some comparisons then here. So what we're showing here is this week, so current week versus the same week last year. When we say week, we mean Monday this week. We've got flights by region and then the percentage change. So really Europe is seeing the biggest impact, isn't it, right now?
Absolutely. So we're down 83%, as you can see, week on week in Europe. And last Monday, just as we'd released the latest numbers, EasyJet announced that they were suspending all of their services, and British Airways were suspending all of their Gatwick operations. And then the ripple sort of cascaded out through other European airlines as well. So, you know, it's been quite significant there, but we've also seen a lot of capacity taken out from the Southwest Pacific, which is essentially Australia and New Zealand, where Qantas have nearly cut all of their international capacity, apart from a few repatriation services. And the one that appears to be holding up better than anything else, and I use that in the context of relativity, is the North American market, where we've only, it sounds a bit glib, we've only seen a 47% reduction in flights week on week. So quite interesting when you look by regions of the world, and I think we're now beginning to see Africa take quite an impact as well.
Seeing some impact, yeah. If we go down into country level, we can really see the point you were making there about, you know, in some cases 10% of capacity or frequency is all that's left operating across some of the major countries here, isn't it?
Absolutely, and this is, if there is any sort of optimism in what the point we have reached, I think this is it, because it's very hard in many of these markets to see if or where they could take out any more capacity. You know, there are a few flights operating in Germany, and they tend to be long haul, and similarly from Hong Kong and the United Kingdom, we still have flights to North America and to some selected markets in Asia and the Middle East. But many of the markets are down at that 90% mark and more. And, you know, those that have not reached that point or look like they're recovering, well, China, we've spoken briefly about, and we'll speak some more about, I'm sure. The United States and Japan. And one of the factors I think about all three of those, China, the United States and Japan, is the strength and size of their domestic markets. They are very large domestic markets, and what we are seeing is domestic capacity is much more resilient and is holding up much more strongly than international capacity, as governments around the world enforce lockdowns and travel restrictions.
And that's in some cases, isn't it? Because the alternative to domestic travel isn't practicable. So, you know, in the case of the States, for example, the geographic distances mean that air travel is still essential in some cases. Similarly, we don't have Russia on this table, but Russia's in a similar position, isn't it? Yes. Countries like Norway, where the geography just simply means that air travel is still essential for some travel.
Absolutely, you know, and in China, although they have a developing high-speed train network, and Japan has a very mature high-speed train network, the reality is that people are still reliant on domestic air connectivity, and there is no alternate modal form that gives the speed and the efficiency that air travel does. So, you know, that is the one benefit you can see in these particular markets.
So if we take a look quickly, we're just displaying the data slightly differently here to show you really this sort of steep nature of the reductions. We've got here the main European countries, and you can sort of see there's just a really similar pattern actually, isn't there, in terms of how
there is very dramatic over the last 3 weeks, and very sharp and pronounced cuts in capacity, and you know, one of the key questions everyone asks is what is the rebound going to look like? Well, the only thing I can say is you can be really assured that the rebound will not look like the collapse. It is not going to come back anywhere near as quickly as it has collapsed, and you know, anyone who thinks otherwise is probably going to be very surprised at the length of time this could take for us to recover from this, not just in these markets, Deirdre, but in the other ones I think you've got on the next slide.
Yeah, when we go on to look at the Americas, again we can see, you know, it's just slightly further along, reflecting what we were saying earlier about the geographic spread. But you know, we've got similar fall off happening, haven't we?
Certainly in South America, and you know, that's Brazil. Been quite dramatic, and that's in a 2-week period, so that's an even sharper reduction than we've seen in Europe, which sort of was over 3 weeks. And I think the United States and Mexico, you know, you can see the interdependency between those two markets and the amount of capacity between those two. But
yeah, very much so.
They've still perhaps got some way to go, although, as we'll discuss later, the CARES Act provides some sort of blanket around US capacity, particularly in the domestic market.
Okay, on domestic, we mentioned earlier that we were going to take a look, didn't we, about at this sort of different pace of what's happening with domestic and international. I mean, we're certainly seeing for now that domestic markets are proving more resilient, and we thought it'd be interesting to look at, you know, at the start of the event, what proportion of flights worldwide operate domestic versus international. And we found it was about 71% versus now, whereas you know, 9 out of 10 flights operating pretty much are domestic, aren't they, on domestic routes?
They are, and I think as much as anything else, you know, it's interesting to see how that shift has occurred. But even more importantly, it's the insight it gives us about how the recovery is likely to occur,
and where it'll happen.
Yeah, and where it will happen. And you know, I think there is a growing consensus that in nearly every market, it is going to be around domestic recovery first. And I know in China, obviously domestic capacity has come back, although the demand is still lagging. But there is some research from C-TRIP, who undertook a study of what they call netizens, I think. So an interesting phrase, saying that 75% of them expected to travel again quite soon, and the majority were going to travel on domestic flights. And that's all about reassurance for the traveller and confidence and
confidence in the market, isn't it? Yeah,
confidence to get back home and repatriate quickly, confidence, a perception that your own domestic hygiene and sanitization standards are sufficiently good enough to, you know, prevent COVID-19 spreading and rebounding back. So for anyone who's thinking about their marketing plans and their activity, if you have a domestic market, now is the time to reach out and begin to start communicating with them.
Okay, let's go into the biggest domestic market then, and we're going to look specifically at the picture in the US domestic market. So we're showing what we saw in a couple of slides back just for domestic flights, so frequency by week compared to the previous year. And then we're also bringing in a slightly different picture. We haven't mapped on the cases and the death rate here, but we're showing the daily frequency of scheduled flights And this is the point we were talking about at the outset, about high levels of cancellations. So 2nd of April, I think we saw 45% of flights cancelled, Matt, didn't we, in the US domestic market?
Yeah, it's been, as you said earlier, the same pattern in pretty much every country. We see that increase in cancellations is substantial immediately prior to the reduction in the scheduled capacity.
And then internationally, we're just again steeper, closer, much closer to. We're down at 84% of the previously operated schedules.
Yeah,
and you can see that shift, can't you? You know, of this spike of cancellations maybe is past.
Yes, and I think a lot of that cancellations and that sort of week of intense activity, or 10 days of intense activity, has been around the closure on and restrictions in other markets that have prevented international services to and from the United States. So this is not just US carriers, of course. This includes the likes of British Airways and all the other international carriers who serve the United States market. But it does show again how quickly, as we've gone through this whole COVID event, how rapidly the acceleration in capacity cuts has become in the last 2 or 3 weeks.
And we, you know, it's at this point that we have to start to reflect on what we're seeing almost daily now in the press about airlines talking about the impact that this is having on them and what their sort of early actions are beyond the, you know, the we're stopping flying or we're cutting 40% of our network or whatever. We're now starting to see washing out decisions about grounding aircraft, aren't we, or retiring aircraft early from the fleet. Really
quickly to, you know, to make a decision such as Lufthansa announced yesterday, that, you know, the retirement of 6 A380s, the closure of German wings, and, you know, a complete fleet realignment as they come out of this event, which will be replicated by, I'm sure, IAG Group, who will probably retire 747-400s, and Air France and KLM. It begs the question, you know, and it sort of is a great segue into Eddie talking about what does this do for aircraft values, because I think, is it 3/4 of European fleets are currently grounded. So there is a lot of spare capacity, and that must impact not only the lease rates, but actually the balance sheet of the airlines who own or lease those aircraft.
And Eddie, you've got some information here for us, haven't you, about that?
Yeah, I mean, hello everyone. Just to give you some background to who I am. I've been tracking asset values and performing market analysis and looking at the dynamics of asset value behavior for, well, since the early 80s, and I'm currently doing that at Ishka. And so when this pandemic started, when it started to take shape, one of the things we knew was that things were going to change in the aircraft value and lease rate space. And the first question that people tend to ask is, well, by how much? And so we tend to look at history to start with as a guide. And there have been a number of downturns and events in the past that we can look at from the 80s, 90s. And probably the one that was closest to what we're seeing today would have been the events after 9/11 and then the SARS epidemic as well, 2001, 2004. So I've just pulled out some numbers here to share, to look at what happened to values and lease rates of some of the aircraft types. So if we look on the left-hand side, you've got the top two there. There's an Airbus A320 and an A320. One built in 2001, so relatively new at the start of that period, and the other one 10 years old. So that first column is the market value, and it just shows you what happened between the middle of 2001 and the middle of 2002, i.e. with the events of 9/11 in between. And so you saw that for For the new A320, the value came down by 18%, and then for a 10-year-old one, it came down by 25%. And then if we add in the effect of SARS as well, because the aircraft, for some aircraft, the values didn't recover for some time, and then SARS added to the issue. So if we look over a 3-year period, you've got 25% down for the A320 and 34% down for the 10-year-old A320. And you can see for different aircraft types, they performed in different ways. For the lease rates, the numbers tended to be a bit more volatile, a bit more accentuated, because that tends to respond first to the marketplace. So again, I mean, some of the observations that you can take out of this, age is a key issue. So usually the older aircraft are more severely impacted. And what we've seen in the States, for example, with American and Delta, they've been releasing, or should I say, they've accelerated the retirement of some aircraft. They already had the retirements in mind, but they brought it forward because, again, it appears a lot of airlines have made the decision or the realization that coming back into the marketplace, they're not going to need as many aircraft as they had. And as John has just mentioned with Lufthansa, on the A380s, they were going to be returning, I think, 6 of them in 2022. Well, they obviously realized that's not going to happen as far as their planning going forward. So they've been grounded immediately or retired from their fleets. So the airlines had taken that issue into account. Age is one of those issues. So, of course, aircraft that are older are less reliable, more maintenance intensive, less fuel efficient. And so it makes sense to step those down. There's also the out of production aeroplanes. So if it's only recently ended production, you tend to find that there's a successor that's more fuel efficient and is better for the future market, and therefore you see some of those aircraft being more impacted. We touched upon regional earlier, and they tend to be impacted less. And as you said earlier, Deirdre, they tend to be there's kind of communities they service, and the kind of alternatives to them are less, and therefore there's less impact in that market. And then again, once the aircraft get down to this level, for many types, you don't get a recovery per se. You get a stabilization of value. So they get to this level, and then if they can retain a lower level of value, that's probably a good result over time, because the market value then catches up with book value as aircraft depreciate over time. So again, a lot of people who own aircraft and assets at the moment, they're probably impacted by, book value, or could be impacted by book value changes if they ever had to trade the aeroplane. So for a lot of people, they're going to try and sit on their aircraft and just try and ride out the situation.
And I think that's the challenge, isn't it, in a market like this, where the bottom is falling out of the market, is to sit tight and hang on to your investment.
Eddie, can I ask Eddie, what does this mean for the 73, the MAX? What on earth is going to happen there, or are they just going to be in a long stay car park for their whole careers?
That's a good question. I mean, obviously the intention from Boeing would be to bring them back into service. How easily they can do that, bearing in mind all the shutdowns in operations in factories and offices around the world. Does that delay the recertification process? Probably in some shape or form. And if the aircraft, I imagine the aircraft will be certificated at some point. The question is, how soon do people want to return them to service, or will they be able to return to service?
Yeah.
There's the cash as well. So yeah, if we start to talk about airline liquidity and the ability to actually ride out the next few months or whatever the time period is going to be, they may not be there at the end of the day, some of them. So it's a very, very mixed picture in that sense. Changes by the week.
We'll come on to talk about that in a moment, in terms of what requests are being made and what action governments are taking to try and support the industry. Some indicators here. I think this is a really interesting sort of summary, isn't it, in terms of what what the current state of flux is in the market.
Yeah, I mean, apart from asking by how much are aircraft values falling, the other question is, well, how do we know? Or how do we know what's coming or what's next? And there are clues out there. And if I can use an analogy, it's a bit like flying VFR or IFR if you're a pilot. So VFR means visual flight rules, and usually as market observers and appraisers, we're flying in VFR. We have visibility of trades and deals that are happening. I mean, at Ishka, we've got an online platform called Transaction Economics, where it shows real deals that have been happening, and that's the information that we can access as well as it provides appraised values. So, but today we're flying in cloud. You know, there are no transactions or very few transactions, so we're relying on what we'd call IFR on instruments. And you know, a pilot may say he can navigate by reference to the instrumentation in his cockpit and looking at the dials and all the indicators, and hopefully that points him in the right direction. Well, we do the same thing. We look at some of these issues here that tell us what's happening in the aircraft market, and again, using history as a precedent, we can see the kind of magnitudes that these events have. So in terms of deals happening at the moment, is anything happening? There are some deals that are wrapping up, which were started before this all became a crisis. In terms of new deals, we've seen somebody like Delta. They've carried out a portfolio sale that's raised about $1 billion. I think American has got $10 billion worth of unencumbered assets. Yeah, they haven't pulled down by that much yet, but and I think Delta has got about $20 billion worth of unencumbered assets. So these are assets that they can sell, do a sale and lease back, for example, in order to maintain their liquidity. But that's not happening yet. But
just jump in there for a moment, Eddie, I guess to some extent we're gonna see airlines taking those kinds of decisions, aren't we? Because as much as, you know, in the US we've mentioned briefly the CARES Act, and we'll come back to that, but it's not just about government funding, is it, to ensure that airlines survive? Airlines are going to have to do all that they can to help their funding through this crisis.
Yeah, and if you've got unencumbered assets, if you own your aeroplanes, you're in a far better position than some of the carriers that don't. I mean, there have been a lot of fast-growing, low cost carriers. They don't have much cash. All their aircraft are leased. They don't have so many avenues to raise funding other than going back to shareholders or doing doing some financial restructuring. So you know, the US carriers are in a much better position. They've had the last 10 years in which they've been able to build that
houses in order.
And it's interesting, that point, Eddie, isn't it? Is because does that actually say that those markets where, with the benefit of consolidation, and 50% of, somewhere around 45-50% of the airline industry's whole profitability rests in the US carriers, is that actually where we're going to be heading out of this? It will be interesting. I know Jeremy's got some thoughts about that as well, but it's a complete moment of change in the whole industry, isn't it? It is a stop-start that we've reached.
Pretty much, and no one's getting out of this easily. It's very painful, even if you've got the liquidity and the assets to work with. So they're just different degrees of pain. And if you look at those storage figures and retirement figures, I mean, I think I've seen figures of up to 15,000 aircraft in store. Now, if you look at past phases of storage, when you've had a downturn, the stored population has doubled. It goes down further and then recovers a bit. But then as you come out of the downturn, you're left with twice as many aircraft as you had before. Well, I think we entered this phase with about 2,500 aircraft already parked.
Wow.
We've now got 15,000. I think once the aircraft move back into service, again, gradually, you'll be left with a residual of maybe, say, 5,000 airplanes. It could be more, depending on how things develop. So you've got a lot of oversupply. And
that means, doesn't it, that the reality for those kinds of decisions that airlines are going, and lessors are going to have to make, is that there will be, that there are almost no guarantees about markets that were previously served or routes that airports had secured. Airlines will have to think very carefully, won't they, about what in their network works for them and gives them the best return.
Well, yeah, and it sounds like some of the airlines, and again, we can touch upon Lufthansa as an example. They already know roughly where they think they're going to be playing going forwards, and they're retiring more wide bodies than they are narrow bodies. That tells you something. And again, looking at the demand from the orders, or in terms of deliveries as well, which has slowed down tremendously. You can see some of these dynamics coming into play. It is going to be a slightly different picture, and I agree with the observations you've been making in terms of domestic markets will come back first, and a lot of that is also down to the fact that cross-border transportation is going to be difficult as countries come out of this in different timescales. So it's not going to be easy traveling abroad to start with, I imagine. And so that tends to shape what people are looking at in terms of their aircraft.
Absolutely. I think that plays to the whole bigger discussion about, which has been going on for 3 or 4 weeks now, about government support and subsidies. And I think the next slide, Deirdre, gives us a good sort of visualization of how that plays out, isn't it?
Yeah, so what we're showing here is the number of seats operated, mostly by carriers. We've got a curveball UK in here. So there's a number of seats operated in 2019 by million, the funding that's been secured or requested. And this, I should caveat this with, this is not an absolute list. It's sort of representative list of the sorts of things that are being requested. And then the size of the bubble is really the sort of equivalent funding per seat that's been requested. We're obviously seeing some governments being quicker to respond to requests than others, and we'll come back to the CARES bill. And there are different models of support emerging. The UK, for example, and that's why we've got them in here as the UK rather than an individual British Airways or EasyJet line. The offer of support is quite different, isn't it? So it's about supporting employees rather than giving direct investment into carriers.
It is, and these are all structured in different ways, and some of the ability to draw down, but they may not, etc. So you have to put it in that sort of context. But I think the thing that I know concerns me, and Jeremy, I think you've got some thoughts on this, is that as we come out of this creates a very challenging position, both in terms of what is each individual government strategy, and does this create an unfair playing field and distort competition?
It certainly does create that risk. Do you want me to sort of comment generally, or do you want to finish off on this slide first?
No, comment generally, please.
Yeah, no, look, John, I totally agree. I think there are plenty of risks for distortion later, and actually your bubble graph showing essentially funding per seat gives a very, very clear picture. And you have to take into account that each decision to fund aviation specifically, or particular carriers specifically, or to fund the economy and make that available for airlines to draw from, or even not to fund at all, is, like it or not, some kind of bet on the future by those governments. And when we come out of this, and as you say, this is going to be a long, slow recovery, we are going to have to see which type of players are going to be the winners. Now, you might say, well, just judging by this graph, Singapore Airlines looks like a good bet for the future, whereas plenty of others, UK carriers shown as that red bubble, may be somewhat weaker. You haven't mentioned many of the European carriers in this chart. You've got Finnair and you've got Alitalia. But of course, that's quite interesting because different governments have a different strategic take on the value of aviation. If you go onto the website of DG Move, part of the European Commission, they will talk about aviation being very much a strategic industry, but we haven't seen a specific aviation set of guidelines or framework specifically for the aviation industry issued by the EU. There's a temporary framework for state aid that applies economy-wide, dealing with essentially the serious disturbances in the economies of the EU. You've seen what's called the damages framework, which is, given that COVID-19 is an exceptional occurrence, what kind of damage has been caused to particular economic operators and how can that be compensated. And the only member state of the EU that has actually taken advantage of these new European Commission frameworks so far is France. And France has put in a scheme under this damages framework to compensate airlines by means of a deferral of aeronautical taxes. By contrast, and this chart doesn't show everything. It doesn't show, for example, Dubai's equity support of Emirates. Obviously, there's been a long-running battle between the Gulf carriers and particularly the European carriers, but latterly also the US carriers, over this sort of huge subsidization debate. Now, that debate had barely quietened down before COVID-19 came along. It wouldn't be that surprising to see that debate arise again. But I think there are some deeper issues that need to be discussed around bailout. Before I do, though, I think you did want me to comment on the CARES Act. And the CARES Act is a very interesting hybrid bit of legislation. It is about 880 pages long, and most of it has got nothing to do with aviation, but there are a couple of chapters that are very relevant that have been well trailed in the press. This sort of $58 billion bailout, but there's no such thing as a free lunch. The bailout of US carriers comes with a number of conditions, some of which reflect concern that have been portrayed widely in the media about how US carriers had behaved during the years of plenty. So, for example, you see that in conditions relating to preventing carriers taking advantage of bailout funds from making share buybacks or issuing dividends. You also have commitments in relation to jobs and furloughs and protection of collective bargaining. You also have a very interesting one, which is making loans and loan guarantees conditional on government getting a share of equity, which is not going to find favour with everyone. But perhaps possibly one of the most interesting conditions, and it was not stated as a formal condition in the CARES Act, it was stated essentially as a possibility for the Department of Transportation to look into, and this they have done, which is to make bailout funds conditional on maintaining route networks and route schedules as they were in place before the crisis started. And the comparison that one has to make is, well, how much are airlines actually going to take up the US government's offer? Now, a number of carriers have applied, US carriers have applied for support for paying salaries of their staff. But if you compare it with 9/11, a number of carriers did not take up the available funds. I think about 10% was actually taken up. But within those conditions, you see a range of different concerns. Very obviously absent from those concerns that were included was any thought about the importance of balancing aviation growth with sustainability. Again, we had barely stopped talking about the Greta effect, about sustainability, about the environmental consequences of flying when COVID-19 came along and stopped people flying anyway. But that debate hasn't gone away, and it will come back. And it will come back as soon as aviation starts to show signs of recovery. But the CARES Act doesn't make any bailout conditional on any sustainability. But of course, I wouldn't rule it out. Probably I'll stop there and allow you to draw breath and comment on that so far.
Do you think, Jeremy, that we will see governments increasingly linking support to making it conditional on a range of factors? I mean, clearly the CARES Act does that, and I'm interpreting what you're saying as not all carriers may choose to avail themselves of it because of those perhaps arduous or unrealistic conditions. But do you think we're going to see more of those sorts of things? And it would sort of seem almost, wouldn't it, that we would be missing a trick. And I don't mean from an industry perspective, but governments would be missing an opportunity here to be thinking about recovery in the context of where we want to be 2 to 5 years from now, rather than the immediate.
Deirdre, it's a good point, but I think part of a challenge we have is the need for immediacy of decision and support. And it's in normal times, it would be a well-considered piece of policy that would link any support to aspects of sustainability and the environment and all of these sort of things. But at the moment, we need the industry and the airlines and the airports. Let's not forget the airports. There are airports that are on their knees at the moment. We need the support now, and sometimes that means the policy that could be put in place is either very good or in the long run is actually counterproductive to the longer term of the industry. And I think we can see that partly in the CARES Act, and I think we can see that partly in other pieces of financing that have been put in place. But it's just, I think that's the big danger at the end of this, is what does the industry look like in the end? And if there is an airline that has to adhere to some really quite rigorous sustainability criteria from its government, and it's competing against someone who perhaps does not have those same constraints, and therefore adopts a different strategy to the market, then that's unfair competition. But I guess that's what global trade has become in the last 10 or 15 years anyway, hasn't it?
And I think that poses an interesting question for you, Jeremy, around that debate about unfair competition. I already see that raging around in terms of who is more deserving of support. There's you can think of a number of country markets where there's more than one carrier. And how do governments make that decision?
It's interesting because there's a question here that's coming from John Gradek asking about, will this whole thing drive a rethink about re-regulation of the industry? And we were talking about that this morning, the fact that this could throw us back 20 years, not only in terms of capacity, but in terms of how governments regulate the market and not control, but manage capacity in a sustainably conscious and responsible fashion. So, we could be back to the days when perhaps even fares have a degree of regulation, and perhaps even schedules and the time of those schedules. And dare I say it, at one point, IATA used to regulate the size of a cucumber sandwich you could have on your afternoon tea.
Heaven forbid we go back to that level of regulation.
Yeah.
Okay, let me comment on that. I think, John, you've made some very valid, if rather alarming, points there. One of which being, if we return to an age of much heavier government involvement and regulation of the industry, of coordinating schedules and so on, we might avoid some of the boom-bust scenarios that we've talked about earlier, the sort of the inherent vulnerability of the sector to shocks such as this. We might also manage capacity in a more responsible way. It will come at the price of competition. It will come at the price of consumers being able to find the very best fares. It may come at the price of the route connectivity that we have grown to take for granted and value around the world. And I don't think we're ever going to get rid of the unfair competition argument. We, even in the high points of globalization in the last 10, 20 years. Aviation is a special case. Aviation is regulated differently from other industries. Capital cannot simply flow across borders in the way it can for other industries. And of course, we are seeing a retreat from the high point of globalization now. So unfair competition isn't going to go away. The sustainability crisis isn't going to go away. In a sense, all the COVID-19 crisis does is kick that down the road a little bit whilst the skies are relatively clear. But I think there will be, put it this way, it's interesting. I think government is going to get pulled in two different directions. And when I say government, I mean government in the very broadest sense of governments, governmental agencies, regulators, and so on. On the one hand, you have the push to make, as John said, quick decisions now, bail out the industry, find a solution, put the airlines and the airports back on their feet, return to something that we might call business as usual, whatever business as usual means, but a path of growth. And why? Because usual arguments. One, aviation contributes to GDP, it creates jobs. Right now, it's absolutely essential for moving cargo around the world for essential supplies. And with a world economy that's on its knees, aviation is very much part of the solution. On the other hand, aviation has had its long-standing critics in relation to taxation on fuel, on relation to whether or not the true environmental cost of flying is properly reflected in the prices we all pay, and whether or not there should be a degree of re-regulation of the industry in order for aviation to pay its fair share. And just to be clear, that sentiment would go beyond international measures so far adopted to deal with emissions from aircraft, EU emissions trading scheme, CORSIA, etc. So I can see as the industry recovers, there is going to be this increasing tug of war between these objectives. But all of this, I mean, to answer your question, Deirdre, I mean, who can tell what government, broadly defined, will actually do? But the debate will be there, and it cannot be ignored. But I suppose there's a positive spin on this, because even if we are looking at an industry which for some considerable time will be smaller and perhaps more focused for the next few years, there are ideas about how airlines might be able to work together. We talked a little bit about consolidation earlier. The EU market has been substantially more fragmented than the US market. There are a bunch of reasons for that, not least regulatory and competition law, that we might see fewer airlines within Europe. We might see more joint development of perhaps technology, of moving towards mass production of sustainable biofuel. A lot of these things are considered to be years and years away before they'll make a real difference. The question would be, I suppose, in this recovery phase, what can the industry do together, consistent with law, competition law in particular, to bring that sort of better future closer?
Yeah, and to some extent fast forward some of those things. Thank you, Jeremy. That's really really been insightful. I wanted to just take a moment to acknowledge that we are 1 minute away from our scheduled completion time. I think we've got lots of really interesting questions, so we will run over a little. If you have to drop off the call because you have other commitments, please rest assured that you will receive a recording of today's webinar, so you'll get the full sort of extent of the questions that we cover. I think very briefly, I wanted to just show, after the first webinars that we ran a couple of weeks ago, we did a very short survey of participants to try and gauge the view amongst those participants of what is the mood out there in the industry. And 2 weeks ago, 39% of people expected that the peak impact on business was going to be May. I think 2 weeks on, I think perhaps that might be shifting. And it is our intention to send out a survey to participants again this week to try and gauge how perceptions have changed and moved on. I think the other things we asked about, and these are all the other side of the discussion that we've been having, is to what extent demand is going to be impacted. Everybody wants to know, when do we think, what is the impact going to be on the industry, and when do we think recovery will come? And that was sort of evident in the responses that we got. So I think it would be good to, and these results are available on OEG's website, so we won't spend much more time talking about them today, but I think it'd be really great to just drop into some of the questions quickly now about that.
So one of the ones we get quite regularly, and we can almost drop it in as our own question, I think, Deirdre, is when is demand going to return and when is capacity going to return? And people have asked us about, is it going to be a sharp V? Is it going to be a bowl type rebound? And I've heard the expression of a lazy L type rebound. And I think you have to understand where we are globally in this process. We are still in a period of decline in capacity, and we should expect that, I think, for the next couple of weeks. And as that we bump along at the bottom of that horrible bumpy road, we are likely to be there in global terms for at least 2 to 3 months. And therefore, with the best will in the world, it is unlikely that we are going to see anything like a recovery back to January 2020 type capacity before this time next year at the earliest. And, we need to remember that for much of the airline industry, by the time there is even a sniff of a recovery and confidence is being rebuilt around September and October, then at that point we enter the IATA winter season, which is a notoriously difficult period for the airline industry when significant volumes of cash are just flying out of the door, and no airline is going to be sufficiently bold to put in excess capacity at that period of time, because it will just be profitless operations. So I think we're this time next year before we even get anywhere near. And if everyone does the same as Lufthansa and other airlines are suggesting they're going to do, to Eddie's point, the capacity is not going to be there because the aircraft are going to be parked up somewhere. So it's a long journey to recovery, and for cash reserves, perhaps even 3 to 5 years.
Okay. A question for Eddie, just sort of building on that, I guess. On your analysis of value lost to aircraft, how long did it take in the past to recover the value? I mean, I think I heard you say that in some cases it didn't. There was a rebasing, wasn't there?
Well, yeah, and I mean, we talk of recovery, and I think what we've seen in the past is the best form of recovery tends to be just a stability in the values. So if an aircraft holds its value, then in effect it's a kind of recovery, because I mean, aircraft have finite lives, they depreciate. So if the depreciated value is going down year on year, but it's holding its value, then that is some form of recovery. There have been some types that have improved in value, but again, it's mainly for other reasons in the marketplace rather than just as a response. But I think I was showing data from 2001 to 2004, so it took 3 years to sort of hit the bottom, and then it took about another maybe 3 or 4 years where it was fairly stable before we hit the next the next event with the GFC. So it can take a while. We tend to break the aircraft out into 3 categories. One is the ones that recover relatively fast in terms of stability and value. There's the types that fall out of favor for maybe a longer period of time, and maybe some of the long haul ones will be those aeroplanes now, because the long haul market might take more time to recover. And then there's the third one, the third group, which is, it's like the 3 strikes and you're out kind of thing. They've hit the third downturn, and they don't come back from that. So they'll be the ones that are being pushed out at the moment. So we're seeing that happen with, like A340s or the MD-80s that Delta has released. They've run their course and that's it. So different rates for different types, but it tends to take a few years.
And to what extent, this is probably a question to you and to John, fuel, we've seen the oil price plummet, haven't we?
Yeah.
How much of an influence does that have on, to you, Eddie, market values and lease rates? And John, I guess, to what extent are airlines hamstrung by hedging policies?
Well, those who've hedged and have significant hedges, will probably have been hedging at maybe $50, $55, and the price today just 30. I think it's about 34, 35. So they're actually paying more for their fuel, and I think Ryanair came out last week and announced that they had a 300 million euro fuel hedging cost because they'd misjudged the market, and it can be significant. And in times of cash reserves being dwindled, the last thing you need to have is a situation where you're paying above market price for fuel. And the ones who would normally benefit from that now, the cheaper fuel price, are those that were not cash rich and were unable to hedge even a proportion of their fuel bill, but their cash reserves have been drained as well. So someone needs to get the Russians and the Saudis together and find a way of flying somewhere and sorting this out. And Eddie, I mean, it has an implication for the values as well, doesn't it?
Well, I think the problem with the hedging, John, is when they agree these prices to hedge, sometimes, I don't know if it's in all cases, but sometimes one of the conditions of the hedge is that they are buying a certain amount, a minimum amount each month. And Absolutely. If they don't, then they pay a penalty. So if you're not flying aeroplanes right now, and you're hedged and you've got one of those contracts, then good luck. The US market, I think, apart from Southwest, I think most of the US market isn't hedged. So the US market seems to be in a better place in that sense.
And of course, Delta Airlines have their own oil refinery, so they're in a better place than anyone.
But I mean, the frustration for airlines today, I think, is the fact that they've got low fuel. They can probably get some really great lease rates and bargains out there, but they're not flying. So.
Nobody wants to fly anywhere.
No, so it's a real quandary in that sense.
Yeah. Okay, let's move on to another question. We'll take a couple more questions. I am conscious of time slightly. When we heard from you, Eddie, about the low-cost carriers, for instance, who might have leased a high proportion of their flight, and actually in some cases, we've seen Ryanair, as we just said, stop operating. Do we have a sense of which carriers or business models will do better out of this event? I mean, everybody's going to feel the pain, but are there business models, legacy versus low cost, or the hub and spoke model for an airport or an airline, or the direct option, or will we see long haul fare better than short haul? There's lots in there, isn't there? But
I think if you look at the low cost sector, and if you go back to that sort of central premise that domestic is going to recover first or will recover more quickly, then if you can find an airline that operates a majority low cost domestic network and doesn't have a significant fuel hedge in place, where there is very limited alternate modal choice of travel, then you might start heading towards Southwest as someone who might be in quite a good space when this does recover. But I think the whole thing about hub carriers is just so interesting, because take an airport such as Dubai. 5,000, 6,000 people all arriving at the same time. We spoke about the intensity of the activity. How do you manage social distancing and all of that? How do you manage new health screening? So Will the hubs come back? Will the legacy carriers come back in the same shape and size? I think we'll see some interesting changes taking place.
Yeah.
Yeah, I think it's. I mean, as well as the models. I mean, there seemed to be something for everyone in terms of models. I mean, most of the planes were flying pretty full, and well, relatively few of them were making money, but the ones that were doing very well at it. I think before we get to which models are the survivors, it's a case of which carriers are the survivors. I mean, I think at the moment the big issue is liquidity. Can they get through whatever the period is going to be before they can start generating revenue again? And that might then help us identify, what kind of the model is afterwards. But they've got to get there first.
You have to overlay all the other piece, don't you, about what will travel look like in terms of what restrictions and requirements will there be from a health perspective, and social distancing potentially on aircraft and in airports. There's all of those aspects, aren't there, that are going to be the environmental factors that impact on what airlines look like going
Absolutely
forward.
And in 5 years' time, when this is all past us and we're reflecting upon it, we need to think about these events do happen in the airline industry. This one is global, but we've seen these on a regional basis before. And we need to allow the airlines to behave like proper businesses and to make the types of profitability and build the cash reserves up that will allow them to be sustainable if such an event was to happen again.
That's quite an interesting point, isn't it, John? Because if you ask your airlines to behave like proper businesses, do you then, because it's the airline industry, because it's strategic, because it has global effect if you end up with a global pandemic, do you need to put limits on how far they can act like a real business as per the US bailout strategy? Do you say, okay, well, you can behave like proper businesses, but we believe you should not be paying out all of your available dividend as dividends. We believe you should not be doing share buybacks because we believe, almost like a bank, you need a minimum level of capital. You need the cash there. And how much cash do you need there? And how do you regulate that on a global basis so it's fair?
Yeah, some sort of liquidity test. Yeah.
Right.
Good point.
Gosh, it's complex, isn't it?
Isn't it? Yeah. On that tricky note, I think we'll wrap it up there, unless any of our panel have anything, any burning things that they would like to say in closing. No. Okay. Great. Well, thank you everybody for bearing with us. We've run over just slightly. I think we could carry on talking about this for the rest of the day, couldn't we, if time permitted. Thank you for your fascinating insights, Jeremy and Eddie, and of course Matt and John. And thank you to all participants for your interesting questions. As we said earlier, if we haven't managed to answer your question during the webinar, we'll do our best to reply in the coming days. And a recording of the webinar will be sent to everybody who registered to attend today. We also would urge you to follow what's happening in terms of our regular updates. John gets up very early every Monday morning and puts together the weekly update, which goes out on OAG's dedicated COVID-19 page. And it's our intention that we would run some more of these webinars going forward, hopefully when we have some perhaps green shoots of recovery or some interesting developments in a positive direction to talk about. Thank you all for joining, and thank you to the panel, and we'll hopefully see you on the next one.
Thank you.
Thank you.
Thank you.
Thanks.
Thanks all.